this loan is going to be benefiting a lot of people here in the community, and those that can't afford home ownership now can be possible through the city of Fresno $100,000 forgivable loan. And so without further ado, I'm going to go ahead and present this presentations for today, which is going to go over the mortgage assistance program that is being offered by the city of Fresno. So the mortgage assistance program is funded by the California Department of Housing and Community Development. The program offers a deferred silent second loan to assist families with purchasing their first home. The highlights: you can borrow up to $100,000. The loan is forgivable in 15 years. There is no monthly loan fees, no minimum cash contribution requirements, and the qualifications is that you have to be a prospective first-time home buyer, have not owned a home in the past 3 years, meet the income requirements. You have to complete an 8-hour home buyer education class. You also have to have the property must be located in the city of Fresno, and it must be the buyer's principal residence and be a single family residence. So on May 25th, 2023, the Fresno Mayor announced a $100,000 forgivable loan for Fresno home buyers. The City of Fresno Mortgage Assistance Program will provide down payment assistance. The city's second mortgage loan will be a 15-year forgivable deferred payment loan. So what that means is that you will have two loans. One will be your primary loan, or which we call your first lien, and then this will be a second lien, which would be like a silent, but it will be up to $100,000 with a 0% interest rate. You know, this is a pretty good loan product, you know, considering that the Dream for All equity appreciation 20% down payment, you know, ran out in 10 days. This one is a little bit more higher than that. As we get more into detail, I will explain why this is a little bit more money for the down payment assistance than the Dream for All equity shared appreciation loan. So the down payment loan will provide homeownership for 50 to 70 Fresno low-income households that meet the Fannie Mae AMI of $58,320 for the HomeReady. But however, if you do the science and really look at the statistics, you know, this can actually double if those people that would you know, apply for this program would take into considerations all of the factors that I have presented with this presentation today. So for the year of 2023, the maximum FHA loan for Fresno County is $472,030 in areas with lower housing costs. FHA loan applicants must have a minimum FICO score of a 580 to qualify for the low down payment advantage, which is currently at 3.5%. If your credit score is below 580, then the down payment requirement is going to be 10%. You know, this assistance that the city of Fresno is offering, as if you calculate it on these parameters, is up to 21.183% of the loan of a FHA conventional conforming, or FHA conforming loan of $472,030. You know, that's pretty huge. So out of $472,000, you can get $100,000 down payment assistance, and if you do $100,000 of that, that's roughly 21.183%. So your borrowers can use the assistance for a minimum required investment for closing costs and or prepaid items. You know, you can apply for this loan without a down payment, with down payment assistance. With the FHA loan limits to apply is $472,030. And so Fannie Mae, you know, Fannie Mae area median lookup tool, if you just Google Fannie Mae and look for the area median income lookup tool, then you can do your own research and see that the 80% AMI is going to be the $58,320. But I did a little bit more math for you and made it more simpler to understand, you know, what is the Fannie Mae AMI area median income lookup tool. So basically this loan is going to be based off of that tool, where 80% is going to get divided by of your income into 12 months. So if you take, you know, the area median income and you calculate the DTI of 45%, so here's an example. If you take $58,320 and you divide it by 12, that gives you a monthly income that you cannot exceed of $4,860. And if you multiply that by 45%, that gives you a monthly housing payment of $2,187. and that has to include your interest, principal, property tax, and your PMI. But if you put down more than 20%, then you eliminate your PMI insurance, which determines your borrower's capacity and ability to make interest and principal payments on a loan using his or her disposable income or cash flow. Now you can find out how much house you can borrow before you start looking, and how you can make the strongest offer possible on a property you choose. So this is something that you don't want to wait around and kind of procrastinate and sit on the sidelines, because not a lot of people in Fresno even heard about the Dream for All Equity Appreciation Program. And so this is not about getting pre-qualified. I recommend you get pre-approved, submit your tax returns, your income documents, your paycheck stubs, so out the gate that you can go ahead and be applying and submitting offers for homes and using this down payment program to help you get in a home. What documents should you have when you're contacting a loan officer? When initially contacting a loan officer, you want to have the list of documents and information available to help answer questions that they will ask you. You have to have your pay stubs for the last 30 days, bank statements for your last 3 months, employment history, and previous tax returns for 2 years. You'll also be required to complete a home buyer education requirement. Many government-sponsored entities firmly believe that home buyers' education and counseling is critical to the success and happiness of a homeowner, and require home buyer education and counseling for first-time home buyers using an FHA program. Who has to take this home buyer education and counseling? Only one occupying first-time borrower on each loan transaction. How do you take the education counseling course? You can do it online. There's an eHome 8-hour home buyer education and counseling course that's only online, and it's a course accepted by Cal FHA, and the fee is $99. There's other online courses like Frameworks and HomeView. They're not acceptable because they don't provide a 1-hour one-on-one counseling and a follow-up session. There's also an in-person or virtual live home buyer education and counseling in person or virtually through Neighborhood Works of America or any HUD-approved housing counseling agency, and their fees vary by agency. First-time home buyers should also be aware of the negative equity, because borrowers will not be able to access home equity for 5 to 6 years, and if the market takes a downward turn, then homeowners will not be able to refinance or make any improvements for 8 to 10 years. On average, home appreciation is 4.6% annually for the appreciation. Now, why does this matter? Well, this is going to be a long-term commitment here, and so this loan is not going to be forgiven for up to 15 years. And if anything happens and things change in your life and you need to refinance, or for any other reasons, then you're going to not have any home equity, which you're going to be upside down in equity. And here's an example. So if you had purchased a home for $375,000 and you put down, the equity appreciation was 4.6%, then every year it's going to appreciate by $17,250. And if you had $100,000 down payment assistance and you divided that by the equity appreciation of every year of $17,250, it would take you 5 years and 7 months to be able to refinance your home and repay the down payment assistance, because as you know, the interest rates now are not going to be the same interest rate 5 to 7 years from now. They're going to drastically change, and if you decide you wanted a lower interest rate, then that's going to be something that you're going to have to make that decision on. The category 2, if you took a $75,000 down payment assistance and you divided that by $17,250, then it's going to take you 4 years and 3 months to refinance, or at least build enough home equity to refinance the home and repay your down payment assistance. The category 3 is if you took a $50,000 down payment assistance, then it's going to take you 2 years and 8 months to build enough equity to refinance the home and repay the down payment assistance. In the category 4, if you took a $25,000 down payment assistance, then it would take you 1 year and 4 months to build enough equity to refinance your home and repay your down payment assistance back. And so this is a long-term commitment that requires an in-depth understanding. And what is negative equity? Negative equity occurs when the value of an asset you own is less than the outstanding balance on the loan. You may have a lender refer to a loan with a negative equity as underwater or upside down, but wait, since most lenders won't loan you money that your home is worth, how is negative equity possible? Let's say you want to buy a home worth $375,000 and you have a 20% down payment assistance of $75,000 and 3.5% earnest money deposit, which is going to total you $13,125. You visit a lender, close on the loan, and take the mortgage worth $286,875. The day you close on your loan, you have $13,125 in equity. You paid your lender. So $13,125 of that $75,000, is the City of Fresno's down payment assistance program that's forgivable in 15 years, and your home is worth $375,000. Fast forward a year, and your local housing market has taken a negative turn. Though you've only paid another $4,364 in your mortgage, principal payments, interest, and taxes off your loan principal, your home is now worth $352,500. So therefore, you went from purchasing $375,000 home that was worth $375,000 to now it possibly, if the market took a downturn, worth $352,500. However, your original loan that you took when your home prices were higher is still in place, and you owe your lender $286,875, including a silent second mortgage of $75,000. The principal loan amount is totaling $361,875. In this example, you have a $13,125 in negative equity because you owe your lender $13,125 more than your home is worth. And so, if you can contact me, and I'll be able to provide you a mortgage equity calculator. I'm a mortgage loan officer. My NMLS ID is 1370676. You can contact me at 337-5990, or feel free to email me at homeloans@mkgenterprisescorp.com, or visit us on the web at mkgenterprisescorp.com. And this information, this material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisor before engaging in any transaction. Neither has the City of Fresno endorsed this video, and the views and opinions are not expressed by government-sponsored enterprises. So that's everything that I have to say about the City of Fresno $100,000 forgivable loan. We're still debating at least we're evaluating if we're going to be participating in this. And so, it's going to be up to the lenders as well as our investors if this is an appetite for them. But this is going to be part one of the City of Fresno $100,000 forgivable loan, which is, in 15 years is a deferred down payment loan. Once again, I think it's a good option for those that missed out on the equity shared appreciation loan. It's actually giving you more than 20%. It's actually giving you 21% and above if you choose to take, the full amount, or the $75,000 amount, or the $50,000, or the $25,000. Whichever you choose, you have a lot of options on the table to decide and think over. But this is something you just don't want to be rushed through and not knowing, what the pros and cons is of having equity and no equity in your home. And if you'd like to speak with a mortgage loan officer, you can feel free to contact me at 559-337-5990.